Okay, so I'm just checking if the stream is loud and clear. So let me just check. Okay, so it's loud and clear. That's amazing. Just checking if that's amazing. Okay, so let me keep this away. Okay, amazing guys. So welcome into another live stream. So we will give you some live insights and let you clarify any doubts about today's New York session. So we will show you a trade which we published a little while ago, but let me just take the chart so you can see it. So I am in the 30 minutes chart of micro mini Nasdaq index futures. So this is a 30 minutes chart, and you can see in the 30 minutes chart in the last couple of days the price is in a range. So if we draw the fixed range volume profile into this, we can see in the Nasdaq in today's New York session, you can see the price strongly pushed up away from the value area high. So that was the Nasdaq. And then when you look at the S&P 500 index futures chart, you can see the same range. However, if you compare with Nasdaq, you can see the Nasdaq had a strong breakout, breaking up from this range at 9:30 New York time over here. But if you look at S&P 500, you can see that area is still in, if you look at the bigger range, still it's in the bigger range, meaning within the range, whereas if you see the Nasdaq clearly shows a breakout. So we notice that at 9:30 what S&P 500 did was, it was within the range. However, if you look at let me check. So if you look at the fixed range volume profile, what we have drawn for this range, the volume profile, you can see in the S&P 500 at New York time 9:30 AM, the price over here pushed away from the value area high, and then the price again came back into the value area at the New York open time. So we can see two different stories in S&P 500 and in the Nasdaq. So Nasdaq showed a sort of a bullish breakout up where away from the value area high, and S&P 500 at that time, as I said, showed the price pushing away from the value area high, but again came back into the value area. So we kept that in mind while analyzing the market, and with that idea, what we did was we looked into the 5 minutes chart at that time. So you can see this is the micro mini Nasdaq index futures 5 minutes chart over here. So you can see at that time 9:30 AM New York time, the price strongly pushed away from that range. So if you look over here, you can see that range in the 30 minutes, you can see it over here. So if we draw the fixed range volume profile, if we draw basically the volume profile into this area covering this range, if I draw it over here, and this is the 9:30 AM New York start time over here. So if I draw it over here, you can see the price strongly pushed away from the value area high at 9:30, right? And then if you look at S&P 500 chart at that time, so this is so look, comparing the Nasdaq 5-minute chart and S&P 500 chart, you can see the Nasdaq shows somewhat clear chart because you can see the range and the price breakout. But if you look at the S&P 500, you can see it is a bit choppy, meaning it's still showing the sign of the same bigger range over here. So if I just draw the volume profile over here, so we can see if I just consider the same range of S&P Nasdaq, and if I draw somewhat similar range into the S&P 500, you can see I will have to cover this area. So let's say from here to here, over here, until 9:30 New York start time. So over here, let me just push it a little bit. Okay, so everything should be fine, just double checking, all good. So you can see at that time again S&P 500 also around 9:30 pushed the price away from the value area high. However, it again came back into the you can see it came back inside into the value area around 10:30. Then if you look at the same price action in the Nasdaq at 9:30, it break out away from the value area, but at 10:30 it did not come into the value area. Over here you can see basically it's like a retracement, right? So the price came back, retraced into over here. But now when you look at that time, if you look at the price push up, you can see the delta is green, that means aggressive buyers, and also cumulative volume delta is green, which means aggressive buying happens with high volume. So that breakout and also supported with bullish stacked imbalance, these green bars over here. So if you look at only Nasdaq, you will see it as a bullish move for that time. But if you since Nasdaq correlates with S&P, if you look at S&P 500 chart at that same time, comparing volume profile concepts, trading concepts, you can see it's not showing a clear bullish sign because of the reasons I explained, especially because the price, if you look at 9:30, the price breakout, this is the value area over here, value area high. Excuse me guys. So it break out from this is the value area high over here. So it break out from the value area high. You can see with some bullish delta, aggressive buyers. However, you can see at the retracement came all the way into the inside into the value area over here. So that's why S&P is not showing that much bullish. Okay, S&P is not showing that much bullish price action at that time. Also, you can see in the retracement, cumulative volume delta is bearish, which means aggressive sellers were pushing the price down. So because S&P 500 is behaving like this at that time, even though Nasdaq showed us bullish signs until at that time, we were cautious of taking a trade, right? Because of this correlation, possible correlation and choppy price action, or in other words, unclear price action in the S&P 500. And also more, if you look at the cumulative volume delta at 10:30 New York time, it's more bearish. You can see these bearish candles. Then that is around 10:30 S&P 500 chart. Then if you look at that same time 10:30 if you look at Nasdaq chart, you can see bullish cumulative volume delta. However, retracement is very sharp, strong candles coming down, which means bearish cumulative volume delta, meaning aggressive sellers. So even though it's a breakout here, and even though it's a clear breakout, and even though it's a clear retracement, due to these reasons we were very cautious. Even though the price action is clear, the delta and the cumulative volume delta and S&P 500 is not supporting that bullish idea. So we have to keep those correlations in mind, and you can see in the retracement it's strong with strong negative delta, meaning aggressive sellers. So with that idea, basically what we looked was the 1 minute chart. So I will bring the 1 minute chart with that idea to show where potential trade entry was to take. So if you look over here at that time, this is where we placed a quick buy entry, but let me explain you why we placed that buy entry. So you can see now at that exact time, this is where the price push from that range. So what I'm going to do is I'm going to draw the range over here, which is similar to the 5-minute range which I draw over here. So I will just move the 5-minute chart away into the other screen, and let me go into the S&P 500 chart. Okay, and where am I now? So, and then also this is the 30 minutes chart. Okay, all good. So at that time period, if I draw the volume profile just covering that same area, okay, so if I draw the volume profile covering the same area. Now before I draw the volume profile, let me just double check the live stream. Check it, guys. Okay, I'm just double checking again. Okay, testing. I'm just checking the live stream. It should be fine. For some reason I am not hearing it, but let me check it again. I just need to double check if things are going fine. Okay, I was talking about drawing the volume profile. Yep, it's all good. It's the live stream is all fine. Yeah, I just need to make sure that it's not getting disconnected, right? So what I was talking was about drawing the volume profile into this price range. So what I will do is I will draw the volume profile into this price area until 9:30 New York start time. Okay, over here, and let me take off so that we can clearly see. Let me take off the big trades. Okay, and yeah, so this is the price range. Let's see. Yeah, so once you take off the big trades, you can clearly see the candles, the price. So over here, Yeah, so this is the range, similar range which we draw into the in the 5 minutes chart. Yeah, so this is the Nasdaq. So you can see at 9:30 the price strongly pushed up. Okay, so this is where we were analyzing earlier. So then the price pushed up from this value area high, as you can see, right? And this is the value area high, okay, this line over here. So this is the full range, but the value area high, you can see the price pushed away from the value area high with bullish stacked imbalances. And also if you look at big trades, you can see what the price did was, when the price pushed up at that time, the price pushed strongly with big buys. So what this means is, when the price pushed up, this price push up is backed by some big players. So this could be smart money, institutional traders, big banks, you know, for that instance, you know, for that quick price push up. So that gives confidence to us that this could be supporting a potential bullish trade, right? However, we have to further analyze, but this shows us the signs. And also you can see the cumulative volume delta is bullish and strong volume. Now when we see that, and when we see the price pushed away from the value area high, and when we look at 10:30 AM during this retracement, what we showed you earlier in the 5 minutes chart. So if I again take you into the 5 minutes chart, at that same time, you can see over here, at that same time, in the 5 minutes chart, that's what we were explaining, the retracement is heavy. It's with strong aggressive selling, the retracement. So you can see in the 1 minute chart, before we take the trade, you can see this is that part heavily pushing down the retracement towards the value area high. And when we see this red bubbles printed, what that means is aggressive sellers are now pushing the price down, which means for these buyers, when they push the price up in this area, the price has been considered expensive. That's why aggressive sellers strongly push the price down, supported with bearish stacked imbalances. So because of that, and also negative delta, and also cumulative volume delta bearish, and also strong volume, because of that, this retracement is very strong. So when a retracement is very strong, it could go further down without being a retracement. So that is what, as institutional traders, we are looking into. So we are sharing these insights with you all, so that as educational insights for you all to understand how institutional traders are looking into price. Basically, these concepts I am discussing with you all are institutional level price action trading using volume profile and order flow analysis. So what I'm talking right now about big trades is part of the order flow, and what I'm talking about stacked imbalances, these red color bars over here are order flow concepts, right? So when we see a strong push down, then we are not going to enter into a trade, right? So because of aggressive sellers pushing the price down. Now, however, because the price pushed up away from the value area high of the range, and because of aggressive buyers pushing the price up, you can see what we noticed was, even though aggressive sellers were pushing the price down, you can see these aggressive buyers over here has defended the price. So the earlier smart money, institutional traders, big banks who enter into the trade defended the price because they don't want to go into a drawdown at this level with a strong push up. Now you can see, because of that, even though aggressive sellers were pushing the price down, what you can see over here is the price halted. Now, why did the price halt? That is because there is a large pool of passive buyers sitting here, which means also the previous buyers defending plus accumulation. Accumulation, because when the price pushed up strongly over here, there is also still unfilled orders. So when the price retraces over here into this level, there is a wall of buy limit orders sitting here. So that is what we noticed. And also, if I into this price push up, if I draw the volume profile, let me draw the volume profile into this price push up. Basically, you could draw it from here as well, market profile and TPO, the same tool. Basically, I'm using the shortcuts. So if I draw for this price push up, if I draw the volume profile, you can see in this price leg up over here, you can see there is value area over here, and you can see in the retracement the price came down all the way below the value area low. And also you can see this retracement. If I remove the big trades, I will show you. This retracement came all the way into this low volume node over here. Now this is what smart money traders call as fair value gaps. So if I unhide this, let me hide this over here. You can see in this price push up over here, there is a fair value gap. There's a small fair value gap over here from this candle high to this candle low. So this fair value gap, smart money traders, which they consider as fair value gaps, if you look at institutional traders, they look that area as a low volume node, which is what I showed you earlier. Okay, let me just bring the market profile and TPO tool where let me close it and let me draw it again. So as institutional traders, what we look at it as the price retracing into low volume nodes. The reason is these low volume nodes has unfilled trades, the trades which were not being able to fill because of the strong price push up. So because of that, these low volume nodes act as a magnet for the price to retrace all the way. So we notice that the price retrace into this low volume node, and then we notice the wicks being generated, and also we note when we see aggressive selling, however aggressive selling not rewarded. What that means is, even though the price pushed down, and you can see red color bars are bearish stacked imbalances. You can see if I enlarge the chart now, this area, if I enlarged, when I enlarge, I'm going into the footprint chart. So if I show you the footprint chart at this time, you can see these aggressive sellers. So you can see red delta over here, which means aggressive sellers pushing the price with multiple bearish stacked imbalances, trying to strongly push the price down, however ending up in a wick. There's a wick generated, which means aggressive sellers were not rewarded. Then they tried again. See again over here, aggressive sellers push the price down again. It's not rewarded. They are not rewarded because the price did not push down. Price made a wick, and you can see bullish candle starting to print. Now when you see these signs, what that means is the aggressive sellers are pushing hard, but they are not rewarded. When they are not rewarded, what that means is, this is the idea for you that this retracement is completed. What that means is, now we are in a price retracement. So in this retracement, when you see aggressive sellers are failing at this point at a previous area of interest, which means the previous aggressive buyers were here. So if I go back again to the chart, you can see if I put the big trades, you can see this big bubble, the green bubble over here. So this area of previous interest for buyers plus low volume node and retracement, price pushed up and retracing down. So the retracement being completed just in the low volume node and aggressive sellers failing to push the price down, aggressive sellers not being rewarded. This is the footprint chart again, and wicks generated and then bullish candles being printed. These are confluences for us to potentially enter into a buy trade, into a buy entry. So you can see, once we see those signs, this is the 1 minute chart of micro mini Nasdaq index futures. Once we see those signs, that's where we were interested of taking a quick buy entry. Now, why did I say a quick buy entry? The reason is, even though Nasdaq is showing us these bullish signs, as I explained earlier, S&P 500 chart was not showing the same bullish signs. S&P 500 chart was showing a choppy price action, as you can see. So if I take you to the S&P 500 chart, 5 minute chart, you can see this is the S&P 500 in that value area high. It's not showing bullish sign at that time at 10:30 New York time. In fact, it's showing bearish signs. Now, because of that, S&P 500 showing bearish signs over here and bearish cumulative volume delta, right? So that is why, even though if I take you again to the Nasdaq 5 minutes chart, okay, let's jump into the Nasdaq 5 minutes chart. You can see, so this is a live market, so it's very insightful for you guys. So you can see at that same time, Nasdaq is showing bullishness, meaning, however, with strong retracement. Okay, so because of all these reasons, strong retracement, right, plus S&P 500 not supporting this idea, that is why in the 1 minute chart, even though it's showing us a clear, it looks like it's a A+ setup, right, in the Nasdaq, right, because all the confluences are supporting a bullish entry. Even though it looks like a A+ setup only in Nasdaq, overall considering S&P 500 chart as well, it's not a A+ setup. So that is how you nail down A+ setups and distinguish between A+, A-, likewise setups. So because of that, this was, even though it's looking like a A+ setup, it's not a A+ setup. However, we can see the signs of short-term bullishness in Nasdaq with these signs, and immediately when this bullish candle printed with this green bubble over here and this green bubble over here, that is where we immediately see a potential buy entry, right? Excuse me. So also you can see why we did not enter into a trade in this area, even though it's making wicks and printing bullish candles, is still, you can see the cumulative volume delta is bearish. So when the cumulative volume delta is bearish, there's a chance where the price may not stop here. This retracement can go further down. However, when we see the cumulative volume delta printing bullish candles over here, this is where, and this bullish candle printed with big trades, and this area being now acting as support and aggressive sellers failing, which means there are passive buy limit orders over here, a large number of buy limit orders. Now when the price push up, why we enter into a trade over here is, all these aggressive sellers, when the price pushed up, there's a chance where their stop losses are triggered. Or in other words, even if their stop loss doesn't trigger, they may come out of the trade because they see their efforts are not rewarded, aggressive selling. And also you can see large number of aggressive selling, bearish stacked imbalances not being rewarded. However, you can see buyers are rewarded with a small effort. So sellers are not rewarded with a large effort, but buyers, these green bubbles, are rewarded with a small effort. If buyers are rewarded with a small effort, and if cumulative volume delta is bullish, and if it's a bullish candle supported with bullish order flow. So if I again go into the order flow footprint chart, you can see it's now green. The delta is green, which means the order flow is also green. What that means is order flow is also bullish now, right? And you can see green delta, which means this push up is supported with aggressive buyers and bullish cumulative volume delta. What that tells us is aggressive buyers are pushing the price up. So at that moment, when we see the retracement completes with aggressive buyers pushing the price up, that is where we placed our quick buy entry. And so we placed the buy entry over here, and the stop loss to be below this green candle over here, bullish candle, and then we target our first take profit in this area, in this swing high area over here for a 1 to 1.5. However, as I said earlier, for the reasons what I mentioned earlier, it's going to be a quick trade because S&P 500 is not supporting this idea, but Nasdaq is supporting the idea. Because of that, it's not a A+ setup. Because it's not a A+ setup, we have to quickly in and out, right? So this is quick scalping. However, the beauty of this approach is, even though it's quick scalping, we are backing our scalp with 30 minutes direction, which means with higher time frame and with order flow and volume profile analysis. So this is institutional level scalping techniques which is used by world top traders. So as you can see, we quickly enter into a 1 to 1.5, and you can see the price push up because the price is supported with aggressive buying. So the price immediately came and hit our take profit. You can see over here, we took our first partial take profits and we let the trade run a little bit. When we see these green bubbles being printed, we let the trade run a little further up over here into a 1 to 1.2, 1 to 2.5, almost 2.5, 2.4. So we kept it running to that. However, we took partial profits because remember, it's very important to do active trade management. So we took partial profits over here. However, when we see this red bubbles printed, which means aggressive sellers strongly pushing the price down, we notice that quick scalp is over. So we trail the stop loss below to this aggressive buyer over here. There was a potential possibility of price going up, so we kept it below this green bubble. However, you can see after we took the profits, the remaining part got stopped out with profits, right, with active trade management. So then you can see the price strongly pushed down. Why? Because as we said earlier, S&P 500 chart was showing bearish signs. So from the beginning, S&P 500, if you look over here, was not showing bullishness and was showing bearishness. So that is why S&P 500, then Nasdaq is correlated to S&P 500. So that is why Nasdaq also followed the path of S&P 500. And that's why Nasdaq also after that strongly pushed the price down. However, what we showed was institutional level price action trading using order flow concepts, volume profile, footprint chart, and also using big trades used by big trades, which means large banks, large institutions, smart money pushing the price up. And with volume profile techniques and confirming the fair value gaps with low volume nodes. So this is very insightful way of looking into the market, analyzing the market, and confirming where the retracement is over, plus taking confluences from order flow and footprint, delta and cumulative volume delta, and confirming the end of the retracement and entering into a trade, and stop loss and take profits also in line with big trades, order flow. So we hope this is a very insightful session for you guys to understand how to live analyze the market and how to take live trades. And please drop us a comment if you found this insightful, which will encourage us to make more videos like this, live trade sessions, right? And to give you insightful ideas. So what you had a look was world class level institutional trading concepts. So hope this was insightful, and we'll come back to you with another video. So take care. If you would like to learn the trading strategies we use, click the link given in the description below to access the full free course and use that knowledge to get funded and start trading like a professional.